You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 6th day of January, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. We do 2 every trading day. The first one is private. That's for members only and those who are taking their 1-week free trial. If you've not taken your 1-week free trial, when Michael comes on, he'll walk you through step by step how to take the trial. It's very simple. Sign up today. We get your indicators indicating today, and you will get 5 consecutive trading days with access not only to the live training room, but with everything you see here. We treat you just like you were a member for 5 consecutive trading days. No credit card required, so you can make a well-informed and intelligent decision as to whether or not what we do is right for you. Now, when the live training room ends at 11:30 a.m. Eastern, we take a 30-minute break, come back for this broadcast, the afternoon broadcast, which is open to the public. That's everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways you can join the afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen is going forward every trading day, about an hour before this broadcast starts, you'll get an email. In that email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. The benefit there is you have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days when you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy, can't join live, but want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. You've already got the YouTube part memorized, so all you got to remember is CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting if you will, but we also archive each and every daily broadcast. Currently, there are over 2,700 daily episodes archived for your educational and viewing pleasure. youtube.com/CFRN. Let's jump into our daily devotional. We are currently on day 12 of 12. What we've talked about these past 11 days is strengthening your faith with the heavenly gifts, or the gifts of the Spirit. Our scripture today is 1 Corinthians 14, verses 26 through 33, and I'm going to share with you from the Message translation. So here's what I want you to do. When you gather for worship, each one of you be prepared with something that will be useful for all. Sing a hymn, teach a lesson, tell a story, lead a prayer, provide an insight. If prayers are offered in tongues, 2 or 3's the limit. And then only if someone is present who can interpret what you're saying. Otherwise, keep it between God and yourself. And no more than 2 or 3 speakers at a meeting, with the rest of you listening and taking it to heart. Take your turn, no one person taking over. Then each speaker gets a chance to say something special from God. And you all learn from each other. If you choose to speak, you're also responsible for how and when you speak. When we worship the right way, God doesn't stir us up into confusion. He brings us into harmony. This goes for all the churches, no exceptions. Again, that's 1 Corinthians 14, 26 through 33. Today, our final day on this topic, asking for the gift of interpretation. In the journey of faith, God gives us a series of gifts that help us grow and serve others. One of these gifts is the interpretation of tongues. This gift is precious because it allows you to understand and interpret what has been said in spiritual languages, making prayer and God's message accessible to those around you. When someone prays in tongues, the interpretation allows everyone to be edified, as God's word becomes clear and understandable. If you desire this gift, it is important to ask for it in faith. God is ready to grant everything needed for His kingdom's good. The interpretation of tongues is not only a personal gift, but a means by which you can help the community grow in the knowledge and love of God. If you feel in your heart the desire to receive the gift of interpretation, you can pray simply and sincerely. God knows your desires and will give you what is good for you. Remember that every gift you ask of God comes with a divine purpose to edify Him, to serve others, and to grow together in His presence. Join me in prayer. Heavenly Father, thank you for the gifts you have given us to build up the body of Christ. Teach us to come together in unity, each contributing with love and order. May everything we do, whether a hymn, teaching, revelation, or words of encouragement, strengthen your church. Help us to honor you in peace and not confusion, reflecting your perfect design. Guide us by your Spirit to glorify your name in all that we do. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen, and happy Monday. Hope you had a great weekend. Let me give you the numbers from around the world. We'll start here in the U.S. The cash markets, or the indices, as they're called. Currently, the Dow is up 343 points, almost 1%. NASDAQ is up 355 points, which is almost 2%. S&P 500 up 73, 1.25%. And the Russell 2000 up 22 points, 1%. In the commodity basket, crude oil is up 27 cents, trading 74.23 last. Gold down $2.90, trading 26.51.80 last. Silver up 61 cents, trading 30.67 last. That's a gain of over 2%. In the Asian markets at the close, the Nikkei fell 587 points, 1.5%. Shanghai dropped 4. The Hang Seng fell 72. And in the European markets at the close, FTSE up 25. The DAX up 303, which is 1.5%. The CAC up 163. That's 2.25%, which is interesting because Justin Trudeau has announced he's resigning. I haven't had time to research if this is the first time in history that's happened, but he's stepping down. And the Canadian markets have reacted very positively. It's a bit of a head scratcher. All right, let's look at the news. Oh, let me finish what I was doing. We had a red day in Asia. It was a green day for the UK, and it's a big green Radio Monday here in the US of A. As you probably know, there's an Arctic blast. At least 60 million people across dozens of states are under winter weather alerts as a massive winter storm swept across the U.S. this weekend from the Rockies to the East Coast. The system arrived in the Midwest late Saturday, dropping up to a foot of snow in many locations. Some parts of eastern Kansas reported as much as 18 inches. And it's pretty chilly here in Phoenix, Arizona. The first congestion pricing plan in the U.S. went into effect yesterday, with drivers heading into a large swath of Manhattan paying a $9 fee during peak hours. The program, meant to reduce notoriously gridlocked traffic and encourage the use of public transit, is the culmination of an effort first proposed by Mayor Michael Bloomberg way back in 2007. Only took him about 20 years to get that approved. The last time I was in London, 2004, they had that in place for quite some time, but it was more like 100 euros if you wanted to drive in downtown London. Now, this money that they take in, $500 million is what they expect in revenue annually over the first 3 years. They say it will be reinvested in public transportation infrastructure. I would hope that they would spend it on some police. I'm talking police with long guns, police who mean business, not just transit cops, but military type men who've had proper training. Because if I lived in New York City today, I would be very hesitant to get on the subway day or night. And I have been to Manhattan and I have ridden the subway many times as a younger man, but it was a different world back then. Sure, there were still muggings back then and holdups, and I even got held up on the streets of Manhattan. I don't remember which street it was. I was in the Navy. We were out on Liberty. All we wanted to do was have a little fun. But anyway, the guy, I convinced him I didn't have any money, and he let me go. So I guess he was looking for the easy and obvious, and that wasn't me on that day. Impressive the courage we have as young men. Now there's talk that Trump is going to pare back some of the tariffs he's talked about. However, President-elect Donald Trump has denied a Washington Post report that his aides are considering narrowing his tariff plan so that it would only apply to limited, specific, critical imports. The story in the Washington Post, quoting so-called anonymous sources, which don't exist, incorrectly states that my tariff policy will be pared back. That is wrong, Trump said in a Truth Social post today. The Washington Post reported that Trump's aides were discussing applying tariffs to some goods from all countries, but targeting the list of items to those where there are national or economic security concerns. Now, this was from 3 anonymous sources who don't want to be identified. I love these anonymous news reports. The Federal Reserve's top banking regulator, Michael Barr, will step down from his position in February, but will continue to serve as a member of the central bank's Board of Governors, according to a statement released by the central bank today. He said, "It's been an honor and a privilege to serve as the Federal Reserve Board's Vice Chair for Supervision and to work with colleagues to help maintain the stability and strength of the U.S. financial system so that it can meet the needs of American families and businesses." Barr has, during his term, clashed with the U.S. banking industry over a new set of controversial capital rules proposed by Barr and other top bank regulators that would require lenders to set aside greater buffers for future losses. The requirements are based on an international set of capital requirements known as Basel III, imposed in the decade following the 2008 financial crisis. Qualcomm is diving further into the PC industry, debuting its new Snapdragon X chip for mid-range laptops and desktops. The chip, which the company says will be available in PCs beginning this month, is the 4th in Qualcomm's line of Snapdragon X processors, behind its Snapdragon X Plus 8-core, Snapdragon X Plus, and the high-powered Snapdragon X Elite. AI PCs are a category of PCs that can natively run certain AI applications without having to rely on cloud processing. That doesn't mean they don't use cloud computing at times, but rather that they can handle AI apps that would take non-AI PCs far longer, such as photo editing or text summarization. And while we're talking about the Fed, or we were, the Fed governor, Lisa Cook, said today, "It makes sense to lower interest rates more gradually, given resilience in the job market and stickier than expected inflation." Remember that transitory inflation we were told about at the beginning of the Biden administration by Janet? Well, yeah, I would definitely say it's stickier than they expected. She said, "I think we can afford to proceed more cautiously with further cuts." The Fed rate cuts made since September have notably reduced the restrictiveness of monetary policy, she added. The Fed has now lowered the short-term rates by a full percentage point. to a range of 4.25% to 4.5%. Cook became just the latest Fed official in the new year to offer cautious commentary on the path forward for the central bank. And last, Saudi Arabia, one of the largest bond issuers in emerging markets last year, has started 2025 with a funding spree as the country fuels its vast economic transformation plan. The kingdom's sovereign wealth fund signed a $7 billion Islamic loan with a group of 20 international and regional banks. The announcement came hours after the finance ministry began a dollar bond sale and days after it raised $2.5 billion from 3 foreign banks. Now, when you think about Saudi Arabia, you think about a lot of wealth. Everybody's got lots of oil money. I guess that's the best time to borrow, because when you're broke, nobody will touch you. But if they're dealing with a debt crisis that they've kept hidden, this could very well come back to bite them. We'll see. Time will tell. Logic 247. We're in week 336. Over the last 336 weeks, we've issued over 18,800 individual handcrafted alerts. We crossed that 800 mark last night. 18,800 and a few. Over those 336 weeks, we've averaged 20% of the alerts being stopped out based on market structure and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Now, Valerie did this recap at 7 a.m. Eastern this morning. Since the markets opened last night, we've issued a total of just 7 alerts. At the time of the recap, we're still waiting on the outcome of 3. That gave us 4 actionable alerts, of which 1 got stopped out. That puts us at 25% at the beginning of the week being stopped out. Last week we ended up with 21%. But when you look at it from the big picture, we've had weeks of 3% and 5% and 8% and 10%. So we still maintain our weekly average of 20% or less by a substantial margin. Now, the logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. as opportunity presents itself. The purpose of the logic alerts is to help you learn how to read the chart. The information that's contained in each alert, the entry price, the initial target, the additional targets, and the final trade to target. If you take those alerts and draw horizontal lines on your 30-minute chart at those price levels, pretty soon you'll be able to see where you should expect support, where you should expect resistance, and then you'll uncover the windows of opportunity that lie between those 2 areas. And yes, you can trade them, but make sure you use them for the true purpose intended, and that's to help you learn to read a chart. If you want to trade for a living, you really need to learn how to read the chart. Now, our original alert service, the concierge trade alerts, they're a little bit different. Number one, they don't come out around the clock. They're issued as a static report shortly after the Globex Open, or as of late, 5 minutes before the Globex session opens. I think there was one day last week when I was not able to get them out ahead of the open, but that is my goal, and I have put in the discussion group a notice that CTAs, as they're called, are scheduled to go out at 5:55, 5 minutes before the open. And the one day that I wasn't last week able to get them out before the open, I also put a note in the discussion group that said CTAs will not come out before the open. This way you can be ready and prepared as soon as the market opens. Maybe you want to get your goal for the day and get on your way. So it's entirely up to you. Now, if you're a member or a trial member, this information is very important to you. Make sure you read it, understand it, and if there's something you don't understand, then ask. Be happy to answer it for you. So last night, all of our members and trial members had every one of these targets 5 minutes before the market opened. Bonds, silver, gold, the NQ, crude oil, Russell, Dow, and the ES. So as we go through the charts, just keep in mind that if you were a member, you would have had that target 5 minutes before the open. So we'll go to the daily chart, and I'm going to clean it up a little bit. We've gone over this information numerous times, and so the chart's starting to get a little bit crowded. So, yeah, I think I'm going to leave that one there. That's proven to be an important area on a couple of occasions. Now, we're spiking the BBC right now. That's the green line. BBC just stands for bull bear cross. When price crosses above the green line, we're bullish and expect higher prices. When price pulls back to the BBC, it holds more often than it doesn't. But we know eventually it will trade through. And when it does, we then rely on market structure to see where we may find support. And there it is right there. Back above the BBC, higher prices. This retracement held 5 trading days in a row. Pullback holds more often than not, until it doesn't. And then this pullback held, sent the market back down to this key area right here. And from there, we have now bounced very bullishly. Our next major resistance is right here at the 50% fib extension. After that would be the high of December 27th. And then the high of December 26th. And then the high right here of December 18th. Now, I encourage you, whether you trade futures or stocks or crypto or Forex or ETFs, spend a couple minutes with the daily chart before you start trading. I know you're trading on smaller time frames than the daily chart, but the institutional traders, the ones who actually move price because of their account size and the size they trade in, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has everything to do with account size. So by taking a look at the daily chart of whatever you're about to trade, you get a free look over the shoulder of the deep pockets that move price. Obviously, if you do what they do for just a minute, there's your goal for the day, a couple minutes. But more importantly, you're able to identify, as I just did, major areas of resistance. Okay? You can't see what I just showed you as far as resistance. You can't see that on your 30-minute chart, your 5-minute chart, your tick chart, your range chart. You need the daily chart for that. So you don't need to stare at the daily chart all day, but again, identify, jot down the numbers that are important. You can see that the low of the day, the close Friday, and the open last night was right at the 24% fib extension. Now we've traded through the BBC. The pullback holds more often than not, whether it's from above or from below. And so we can't say that this hasn't held as of yet, because quite often it will get spiked. How we close today, if we close above the BBC and then open tonight and begin moving higher, okay, then unless the market falls apart, we'll be able to say that the pullback didn't hold. But for the moment, it is. And if it doesn't hold, I just gave you all the areas where you should expect potential resistance. Okay? All right. The 30-minute chart is where all the alerts are created. The Logic 247 alerts, the Concierge Trade alerts. These are last week's weekly trading zones. All alerts issued on a Sunday night are based on last week's zones, because the new zones don't come out till Monday morning at 6:15 a.m. Eastern. Once the new zones are published, they're carved in stone for the entire week. They don't change in any way whatsoever. We've published the zones every Monday for our members for now over 15 years. December 14th marked 15 years. When price rallies up to a weekly zone, we expect resistance till proven otherwise. And when price drops to a weekly trading zone, we expect support till proven otherwise. When price encounters a weekly zone, 70% of the time you're going to see this: consolidation. 20% of the time you'll get rejection, like that. 10% of the time you'll get the slice. That's where a 30-minute candle slices through the zone like it's not even there. Typically, when you get that slice and it runs out of steam, price will retrace back to the zone it sliced through, continue in the direction of the slice. That did not happen here. There was just too much selling pressure. There wasn't even an attempt to retrace. Price dropped all the way down to 58.74.75. Notice that the black step line crossed red and falling right here. See, on the way down, you had the perfect stack: price, step line, red and falling, BBC. But the picture changed right here. When the step line crosses red and falling, we expect price to retrace to the BBC. Price always reverts to the mean. In our case, the mean is green, and it's called the BBC. So these alerts, the CTAs and the logic, were based on last week's zones. But any alerts that I put out today or the rest of the week, of course, will be based on this week's zones. So you'll see this week's zones on my chart tomorrow. All of our members and trial members had them this morning at 6:15 a.m. Eastern. So we had a gap higher open on the ES last night. In fact, we gapped almost up to the long target. Resistance based off this high on Friday. That sent us back down to the zone, which held as support the BBC right below it. Then as red and falling turned to blue and climbing, we made another run and we hit the long target. We consolidated there for an hour and a half, continuing on to the next target where we consolidated for a couple hours. And then right here, 30 minutes before the Wall Street open, we had a huge red candle. Came all the way down to touch the BBC. That pullback held. You'll notice that on the pullback, because it happened inside of 30 minutes, there was no change in color. Okay. So on this pullback here, we went to red and falling, then back to blue and climbing. But this was such a quick move, everything stayed blue. And this may now be the high of the session, right here, this little doji. The step line has crossed. It crossed here. And remember, when the step line crosses, we expect to pull back to the VBC. Okay? It was a fast one. It crossed. We got the pullback, but then the trend continued. Now we're getting across for a second time. So, what do we expect to happen from here? A retracement back to the BBC. Does it happen 100% of the time? Very few things happen 100% of the time, but it does happen more often than not. On the Dow, this was the open last night. We had red and falling overhead, blue and climbing, red and falling, sent us down to the BBC, and the pullback held. We consolidated for hours along the BBC. Red and falling turned to blue and climbing, and that sent us up to the long target, where we consolidated and then a pull back to the BBC, and then another leg and a retracement. The pullback held, a leg and a retracement. We didn't quite make it all the way back to the BBC there, and then we consolidated at the zone 43,360. The step line has now crossed blue and climbing, so anticipate a retracement back to the BBC. See, the BBC right now is aligned with the low of this candle right here, so that would be a perfect spot. Remember, price always reverts to the mean. Okay, so this gives you a clue as you're at a zone. Okay, you've got a little double top there. Where's price headed? Well, it's heading down, and it should make it to this spot right here. It may spike it. It could potentially trade through it, but that would detract from the theme of the day, which is higher. We've been in enough. We started out last night with a bit of a downtrend, but once we hit the BBC, it's been leg, retracement, leg, retracement, leg, retracement, leg. So, on the Russell, this was the gap higher open last night, right into blue and climbing. When blue and climbing gets directly above price, that's quite often becomes resistance because it's on its way to becoming red and falling. So that's kind of a heads up there. That opening candle quickly reversed. Down we go to the BBC. Red and falling turns to blue and climbing. That takes us to here. And then you see this little red candle here. It opened here, reverted to the mean, and then took us here. Now, eye of that candle is 2313.6. If you scroll left, you'll see where that resistance came from. Resistance always sends the market looking for support. When price drops to a weekly zone, we expect support. When price drops to the BBC, we expect support. So that was support times 2. Sent us up to red and falling, which is usually resistance. So that's now sending us back to the BBC. So the pullback held here and here and here and here and here. Remember, we know that eventually price will trade through the BBC. Okay, so we could spike it and find support at the zone. We could spike it and find support right here at the long target. On this pullback here, as you can see, we traded through the target, but then as we pulled back, the target became support. And we can see that same scenario unfold right here. On the NQ, here's where we opened. We consolidated for a few hours. Red and falling turned to blue and climbing. Took us up to the target. In each of these instances, plenty of opportunity to get your goal for the day. Then we get to the zone overhead and we consolidate. And then at 9 o'clock, we got that same retracement to the BBC, and it held. Step line crossed, retracement to the BBC. But blue and climbing never changed color. So that was a fast move, okay? Keep in mind these are 30-minute candles. And you can look left, see what's up. Step line has crossed blue and climbing, so where are we headed? Back to the BBC. When price gets there, the question is will the pullback hold or not? You can guess if you want. That's called gambling. Or you can be patient and wait and see. If we get to the BBC and then start printing a green candle, then it's safe to say the pullback has held. Crude oil. This was the opening candle last night. We ran into red and falling. That pushed us back to the BBC. And then we hit the target. And then we traded through the BBC. And we got down into this area right here. Market found support there, just shy of the short target. But any of these candles, like here, you're below the BBC, so you expect lower prices. You got red and falling overhead. So this candle opened at 73.82 and it dropped to 73.63. So that's $190 per contract traded. Support sends us to resistance, which sends us back to support. When red and falling gets directly below price, it's potential support because it's on its way to probably becoming blue and climbing. And once it did, we made a nice clean run all the way up to the long target. Then we had a retracement at 8:30. It didn't quite make it all the way back to the BBC, but it did give us another leg to the upside. We had a leg, a retracement, a leg, and now the gains that we had on crude earlier have pretty much dissipated. We're headed back to potential support here, here, here. And if we trade through the short target in the zone, you've got a bullish cross right here. When the blue line goes above the green line, that's called a bullish cross. When you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be good support. Opposite is true of a bearish cross, just in the other direction. So we know where price is trying to go. Everything's in place. Price, step line, red and falling. We don't have the bearish cross yet, but it will follow if price continues to drop. Gold. We opened last night right here. Up to the BBC. We spike the BBC. But the pullback held. Down to blue and climbing. Another pullback held. And that took us down to the short target. Consolidated for an hour and a half here at the zone. Continued down to the next zone. And support sent us to resistance, which set us back to support at the step line. And then there was a moonshot all the way up to the target and to the weekly zone. Again, these are last week's zones because the new zones don't come out till Monday morning, and these targets were published last night, 5 minutes before the open. Once the market finds resistance, it's going to go look for support. This zone was 2623/24, and this low was 24.6. So we missed touching that zone by 6 ticks. Then we pull up to the BBC, we consolidate. We have a green candle that opens and closes above the BBC. That's typically an indication that the market is going to go back to challenge the previous swing high. In this case, that didn't happen. In fact, the high of this candle, 2652.7, 2652.6. I almost thought we had a bearish engulfing candle, but the context was not that good. So, where are we sitting now? At the short target and the zone from last week, 2647/48. So we're in the pocket. Now red and falling has gotten directly below price. So you've got the zone as support. You've got red and falling as support, potential support. If we consolidate sideways, another candle or two, red and falling is going to turn to blue and climbing like this, and then we could get another run back to the upside. You got potential resistance here, 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 and then here. Silver went wild today, or since we opened last night. From the low of the session, 29.87 to 30.87. That's $5,000 per contract traded. So we open, we hit the long target, we hit the short target, and we hit the long target, and then this run, this is some pretty heavy institutional buying here. In that 30-minute period, 4,700 contracts traded in that one 30-minute candle. And that 30-minute candle opened at 30.22 and ran up to 30.76. That's well over $2,500 per contract traded in that one candle. So then we get a retracement to the BBC. Now we spiked that. I mean, this is like living in the land of giants, okay? But ultimately the pullback held. Sent us back to red and falling, resistance. So what's price most likely to do now? drop back to the VVC. Question is, does it hold or not? Just have to be patient and wait. If price trades through the VVC, then the next area you'd expect for support would be here. If the pullback holds, then you've got potential resistance, of course, at red and falling, at here, then here, and then right there, where the step line crossed blue and climbing, then here, then here. We trade every market exactly the same. Same indicators, same everything. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. Now we've come well off the high of the day. We're now just below the 38% fib extension. Mike will be joining us here in a minute to give us a recap of what happened in the live training room, and then we'll do some live trading on TradingView. If you want to become a member, send an email to support@cfrn.net. In the subject line, put "I want to become a member." In the body of the email, put your name, your phone number. I'm not going to call you, but we will send you an email that explains what it means to be a passport holder. And there will be a link for you to click if you decide you want to become a member. The first thing you're going to get is 2 hours of live training every trading day. 9 out of 10 new traders fail because they don't have anyone to teach them how. They buy courses, they buy indicators, they buy oscillators, but the missing ingredient is someone to teach you how to properly use the tools that are available to you. So that's what we do for 2 hours every trading day. On top of that, you have access to private one-on-one mentoring. The strategy you learn, the indicators you own as a passport holder, again, are fluid across all markets, all time frames, because price flows the same. As a passport holder, you'll get the Logic 247 alerts round the clock. You get the concierge trade alerts every evening the second they're published. Monday morning, 6:15 a.m. Eastern, you get the weekly trading zones. And again, once they're published, they're carved in stone for the entire week. And you'll be able to attend the members-only workshop every Thursday night at 8 p.m. Eastern. And last but not least, you get the golden key that unlocks all the private channels in Telegram. Now, when you're on the trial, you have access to some of the channels in Telegram. But when you become a member, you have full, unfettered access to all the channels in Telegram. I think we've got, 7, 8, 9, 10 total. There's a few, okay? It's everything a trader needs, all under one roof, at one low price. You don't have to piecemeal things together as you may have done in the past. You get around-the-clock support, 24/7. And I guess we need to figure out where Michael is. And let me check and see if I can find him. I guess he's trying to get logged in, so sit tight. All right, I can't find him, so we'll just go to our good word for the day. Never stop learning, part 2. Proverbs 1:5. A wise person will hear and increase in learning. Loving God with all your mind means managing your mind and making the most of it. It means loving God logically and creatively, intuitively and thoughtfully. Albert Einstein, one of history's greatest minds, said the important thing is not to stop questioning. Curiosity has its own reason for existence. One cannot help but be in awe when he contemplates the mysteries of eternity, of life, of the marvelous structure of reality. It is enough if one tries merely to comprehend a little of this mystery every day. Never lose a holy curiosity. Downplaying his genius, Einstein said, "I have no special gift. I am only passionately curious." The Bible says in Psalm 24:1, "The earth is the Lord's and all its fullness, the world and those who dwell therein." So, your curiosity should be boundless and without limits. The Latin word for education means to draw out rather than to cram in. Most academic programs focus on force-feeding knowledge rather than releasing curiosity. The result? We know some things, but we lose what's most vital, the love of learning. In one study of a top university, the highest scoring graduates were given their same final exams 1 month after graduation. All of them failed. When you attempt to cram the truth into your mind, it seldom gets past the short-term memory, and it assuredly doesn't get into the soul. Sadly, sometimes that's what happens in church each weekend. So what's the answer? Put God's Word into practice every chance you get. And that's our good word for today. I'll try one more time to roust Michael. Not sure what problems he's having, but stay put. I'll be right back. All right, guys, Michael is on his way, so we've got everything covered on our end, and he should be here momentarily.
Hey, D, are you still there?
Yep, still here.
Okay, sorry about that. Totally off on time today. Hang on. This morning I ran over by 20 minutes too. All right. It's just off. I don't know. Well, all right. Let me take the charts.
All right.
All right. Here we go. Sorry about that.
All right, looks good.
All right. Good afternoon, everyone. Today is Monday, the 6th day of January, 2025. I am sorry for not being timely today. I always mean to be, but I was way off. Anyway, if you have not taken a free trial with us and you want to take a free trial with us, then go here to mytradingiq.com. Click on the purple button right here. There's no credit card required for the trial. When you click on that purple button, it's going to bring you to this registration page where all that we ask for is your name, your email, and your phone number. Down at the bottom, it gives you Ninja Machine ID if you have NinjaTrader, and it gives you TradingView login ID if you have TradingView. All right, hit the register button, and you'll be sent all the information that you need. And if you give us that stuff down there, we'll be able to get your indicators indicating for you at the beginning of your free trial. All right, so the results from today. Now, we did a lot of talking. I did a lot of talking today, and not as much trading. You can see we only did 19 trades, which is about half of what we've been doing. And the results are about half as what we were doing. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 6th day of January 2025. We made 64 ticks on the NQ, 5 ticks on gold, and 13 ticks on the ES. Put us at 532.50 on the morning session. Today took 4 minutes and 2 trades to get to the goal for the day. At that point, we're up $1,150, and we took a total of 19 trades. That is with 10 contracts for $1,150. So on the month now, we're at $5,232, averaging $17.44 per contract per business day. That's over 3 business days. All right. It's the same thing on the year right now. All the month of January would be the same thing. So let's get into the trades that we didn't do, and all that stuff. All right, we didn't have a ton of trades, but we did have some here on gold this morning, and that is currently on a 9 range. All right, so these were our trades on gold. Our first trade on gold, we stopped out minus 15. The second trade on gold was right there. We ended up with a break even on that, and then we had a plus 20 on that one right there. Okay, plus 20. That got us to plus 5 overall. Now, there were some other trades in here on gold. There was one right here. We would have sold the open of that bar. Okay, there was one over here. We would have bought the open of that bar. It would have been break even. You would have sold the open of this bar. That would have stopped you out. Bought the open of that bar, would have been break even. Sold the open of this bar, would have been a nice profit. And one last one over here, we would have sold the open of that bar, which would have been a nice profit. That was the day in gold. All right, not that much movement in gold today. Some, but not that much. We ended up with just plus 5 ticks on gold. All right, the Russell. Let's go back to the beginning here on the Russell. We started out with the stop out. This was our first trade of the day on the Russells right here. The stop out minus 25 ticks. Then we had a break even there. I had highlighted some of the other trades that triggered in here while they were triggering. Clearly I did not get them all, but then we had another break even, and then we had a plus 20 right here that got us, I'm sorry, we had a plus 25 right there. That got us back to 0. Plus 25 right there got us back to 0. Other trades that triggered in there, there was a short trade right here. That would have been a nice profit. A long trade right here. That would have been a nice profit. A short trade right there. That would have been a nice profit. A long trade right there. Good profit. Long trade right here. It would have triggered from right here. That might have stopped you out to the tick. A short trade right there. That would have been a good profit. And one more long trade right here. That would have been a nice profit. All right, and I believe that was it for the morning session. During the break, there was one more short right here. That would have been a great trade. There's a long going on right now that I can put on if I can find my DOM. And I have to check to see that it didn't go 10 ticks into profit yet. Should have been right there at 99.1, and it's gone up to 99.7. Nope, so I can still put it on. All right, so I'll put that trade on right here, and I actually got a good fill on it. Right here at 98.9. Okay. So we're able to put this Russell trade on right here because it hadn't gone 10 ticks into profit yet. Now, the reason we want to put this trade on, you want to buy the open of the next bar. When the blue leads into the oversold like this, you want to buy the open of the next bar. So right there was the open of the next bar, and I just bought it. I actually got a little bit better because this is what usually happens. Usually, when it's moving down like this, it's going to have a little bit of momentum on the downside when it gives you that open. And so we're able to get a little bit better. The entry point right at the open would have been right here at 99.1, I think, right? 99.0, 99.1, right in there. So I got a little bit better fill. And we'll see where that goes, right? What it should do, since we're in a trend right here, we're in a little bit of a downtrend. It's already done on the downside, how far down it should go. On the upside, it should probably reach a swing high right here is probably all it should do. It shouldn't have a big leg up right here unless it's going to change trend. You know, but we're going to be looking for this to give us 10 ticks in profit, and we'll bump that stop to break even. Okay, and that was the Russell today. Now let's get into the ES today. The ES today. Now we do have a 25 tick stop on this. It should be 25. Yeah, that is 25. Okay. The ES today, we didn't. Oh, I guess we had plenty of trades on the ES. Let's go back to the beginning. I use ES for my example today in a lot of things. So any color arrows that you see on here that are not standard colors are things that I used in my examples. Okay, so our first trade on the ES was right here. It was a break even. Our next trade was over here. That was a break even. In between those two trades, it was a really nice trade right here. Would have been from that open right there. Okay, there was also a short right here that wouldn't have gone anywhere. This needs to get 10 ticks in profit. We'll bump that stop. Okay, it needs to get up to right there, and we'll bump the stop to break even on the Russell. You see, I don't even need to see the chart anymore. Now that we got the entry in place, we just have to manage the risk according to our risk management criteria, our rules. And it says with this particular bar size, after 10 ticks in profit like that, the stop goes to break even. Okay. Now there's a couple of different ways I can put the stop at break even. I could do it like that, or I could drag it all the way up like this, but you can see that takes a lot longer. I'm going to lock in 5 ticks on this. Okay, just going to lock in 5 ticks on this trade while I go over the rest of the trade setups here on the ES. Let me bring up the question box because Bart. You ready for that, are you? Okay. Up here. Now we're at plus 10 on that. Now we'll go to plus 15, and we're out with plus 15 on that Russell trade. Okay. Now, how simple was that? All you had to do was wait for this to lead into the oversold, then buy the open of this bar. And I just made 15 ticks on that. Pretty simple stuff, right? Bart, you should have all this stuff already. I shouldn't have to do anything for you. You should already have all this. This is just the regular slingshot, and this is the regular trigger. All right, we're going through here on the ES. We had a break even, then another break even, and then we had a long trade here. We got 20 ticks on this long trade, that one right there. And then we stopped out. Well, we had a break even, then a stop out that put us back down to 10. Then we had a plus 1, got us to 11, a break even. Then a plus 2 that got us to 13, and that was all that we did on the ES. You see how all this was in chop right here? All this chop that we did trading in right here. Now, normally, if I throw the context on there, okay, I forgot I took the ribbon off the context this morning. And put the ribbon back on the context and put the context on there. There. Okay. See, normally we wouldn't be trading it all in here. Right? Can't see all 4 lines in there, you wouldn't have traded. Can't see all 4 lines all through here, you wouldn't have traded any of those. And this stop out that I took right here, that was my fault. I shouldn't have stopped out on that because it had already gone 4 ticks into profit when I entered. So that was a mistake. I should only have 3 winning trades and a couple of break evens in there. Bart, and I'm so sorry that I was late. I've been late for everything today. I don't know what's wrong with me. Anyway, right here, you see how normally you wouldn't have any trades in here at all, but right here was a short from the open of this bar. The open of that bar right there was a short. Okay, and where you wouldn't normally have any trades, there was a long from the open of this bar right here. And there would have been a long from the open of this bar right here. And a short from the open of this bar. Where you would not normally be looking to go short. This right here, Bart, was your counter trend trade. Okay. Right. Let me put you on my list here, Bart. All right. So when you say you don't have anything, you mean you don't have the ultimate slingshot, you don't have the TV trades range trigger, you don't have anything on TradingView? Because I know you're using TradingView and Ninja. Okay, so let me just finish this here. right? As it goes through here, there was another short right here. We normally would not be looking to go short. It would have been at the open of this bar right here. So this is a 7 range. We would have had enough to take some good profit in that, almost the goal for the day. The next one was a short right here. Again, we wouldn't have been looking to go short. You could have gotten the goal for the day right there on the ribbon, the move back down to the ribbon. There was one more short right here. You could have gotten, actually it was on this bar right here. You could have gotten the goal for the day on that. And then there was a long trade on this bar right here. With the ribbon all crunched up, you wouldn't normally take that trade, but you would have taken a trade right there. You would have had a short right here on the move back down to the ribbon. A long right here. From the open of this bar right here would have been your long trade. That would have been break even for me. Okay, that was all there was that we did this morning. Now during the break, you can see anytime the blue leads into the overbought or oversold is a trade, right? Like if I just go through the long trades, if I just go through the long trades, watch this, watch this. If I put this on and I do the cover, and then over here, first make the cover dark blue, or if I make it the same color now, if I make it dark blue, and then come into the inputs, make the cover low, minus 90. Oops, woo, minus 90. I'm going to do minus 100. Okay. And then just say, okay. So now anytime that the blue comes out of the top by itself, anytime the blue comes out of the top by itself is a short trade. Okay. So you can look at the day in just in a flash and say right here, a short. When it comes out of the top and hits the green line there, all right? A short right there, a short right here, that wouldn't have worked. A short right there, that would have been perfect. A short right here would have gone enough to get you stopped to break even. A short, it's the bar after it hits the line, so it would have been a short right here. That would have been great. A short right here would have been perfect. A short right here, perfect. A short right here. That went up a little bit before it went down. A short right here, it would have been on this bar. That again went up a little bit before it went down. But you see how simple that is? So if you had a bias from a larger time frame, for instance, if like, let's say on the on a 30-minute chart, on a 30-minute ES, you were above the BBC, above the ribbon, above the BBC, and you're going up to the next weekly trading zone and you really want to take long trades, that's all you have to do is put this on. Just cover up all the other end. In here, what I just showed you for long trades, this would be 100, and this would be 65. Okay. So now, anytime the blue comes out of the bottom, if you had a long bias, anytime the blue comes out of the bottom, it hits the red line by itself is a long trade. Right? You buy the open of the next bar. Anytime it does it, you buy the open of the next bar. Like right here, you'd buy the open of this bar. You'd buy the open of that bar. It almost made it right here. We would have bought the open of that bar. Right here, you buy the open of that bar. Right here, you would have bought the open of that bar. That would have, well, it might have stopped you out. You bought the open of that bar, and it's a 7-tick range. If you had a 10-tick stop, it didn't pull back a full 10 ticks, so it probably wouldn't have stopped you out. But right here, you would have bought the open of that bar. Right here, you would have bought the open of that bar. That would have been a break even. Right here, you would have bought the open of this bar. That would have been an okay trade. Right here, you would have bought the open of this bar. It's the bar after. So it would have been this one right here. You would have bought the open of that bar, which would have been okay. Right here, you would have bought the open of this bar right here. If I bring it down closer, you can see right here, the open of this bar. And right here, the open of this bar. Now that might have stopped you out right here with this one. That might have stopped you out. Okay. But if you had a bias, like you want to be on a much larger time frame, let's say this is a 7 range. So let's just say you put a bias on there of well, I'm going to go old school here, and go back to the go to the price panel, and I'll show you something. Here in the old price panel, let's say you just had a bias by the YBR. Right? So when you're above the YBR, you're only taking things that poke out of the bottom. Yeah, that's old school stuff. And when you're above the YBR, you're only taking things that poke. When you're below the YBR, you're only taking things that poke out of the top. That's an easy bias to put on if you want to put one on. I was going to say go to a larger time frame, and you can also do that. Go to a larger time frame. Go to like the 30-minute chart or something like that. And if you're below the BBC, only take short trades. If you're above the BBC, only take long trades. All right, but that was it for the ES. On the ES, we ended with plus 13 ticks. Plus 13 ticks on the ES. Okay, let me get rid of that. And that. You don't need to have any of that stuff on price, but if you wanted to, you can. The NQ. Now we didn't have as many trades on the NQ as we normally do because the NQ was just wild this morning. So I didn't trade it that much. It is where we got the goal for the day. If I go back to the beginning, this is where we did some training on the NQ this morning. So any arrows that are not the normal color were from training this morning. But our first trade on the NQ was right here. We got 48 ticks on that. And our next trade was right there, and we got 48 ticks on that. That put us up to 96. But after the first trade is where we got the goal for the day. Now remember, we had stopped out on the Russell, so we were minus 25 there, and then we got 48 ticks on the NQ. So we're plus 23 ticks overall out of that, plus 23 ticks. And then we added that on. We had on the NQ itself, we got 48, and then went to 96, and then wow, it seems like we had more trades in there. We went from 96 to 100. We had a 4-tick trade somewhere. We went to 100, and then we stopped out in here. I had stopped out in here and went down to 64. And that was where we stopped trading it, really, I think. This was what I was showing earlier in the lesson this morning. And Bart, we were saying in the lesson this morning, using the trend trades, using the ribbon and the trend trades, only trend trades. The orange ones are trend trades. The purple ones are the divergence trades. Right. So for the divergence trade, you would have had it when it went into the overbought right here. You would have shorted at the open of that bar when it went into the overbought. For the trend trade, where the ribbon was all spread out and you had to come out of the overbought, it would have been the close of this bar, not the open, but the close of that bar, 30 ticks away down there where you would have been looking to get in, the open of that bar. Then there was a long trade right here, right on the open of this bar right here, a long trade from right there that just ran right up to there. There was a short trade in here. All right, now this is the counter trend trade bar. All right, the short trade from right here going down to the ribbon at the open of that bar. When it went into the overbought right there on this green bar, the open of the next bar was your counter trend trade going down to the ribbon. Once you got to the ribbon, the blue came out of the oversold right here, giving you a bounce off the ribbon because you see all 4 lines. So you had a long from right there if you wanted it from the ribbon trade. You had that counter trend trade into the ribbon trade right there. Again, you had the same thing over here. You had a counter trend trade that's seen right down to the ribbon, and you had a ribbon trade coming out of the oversold, running up right there. Now, in the middle of all that, there was another counter trend trade right here. You could have gone short from the open of this bar. You could have gone short right there. That's about 20 ticks, 26 ticks or something like that from here to here. So, if you got your 48 ticks here, you could have immediately reversed it and got another 20 ticks right there. Now, remember, we're not doing this to trade 1,000 times a day. You can see right here between these two types of trade setups, there's like 20 trades right here. In this 15, 20-minute span, there was 20 trades. Right, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 trades. 15 trades, if I got them all. And if you just did one or just did the other, they all worked out to get the goal for the day. Right, so what you have with the divergence trade are options to get into many other types of trades. And if you get down with the divergence trades, there are so many of them that you're going to have plenty of opportunity to get back up. Okay. And though I don't really want to get into this stuff, I like having no indicators at all up there, But if you wanted to have an indicator, you could throw your YBR on there. And I know some of you guys don't have this. Most people don't have this because this is really old school. But if you get rid of everything else, and you just have the YBR on there. If you want to have a bias, only take long trades above the YBR and only take short trades below the YBR. Okay, that would limit the number of trades that you take, and it would give you a bias. I mean, to do something without that, I mean, you could just put anything on there. You know, you don't have to have the price panel. You could put like a 55 simple moving average on there. If you want to, you can go in here to technicals and just go to simple moving average, simple, and make this a 55, and say you only want to trade when you're above that 55. You only want to go long when you're above the 55. And you only want to go short when you're below the 55. And that will limit the number of trades that you get. Now, the divergence trades, for those of you guys that are watching still, the divergence trades, they trade really well in the chop. All right, where normally the trend trades don't trade well in chop, you don't end up with trades in chop. The divergence trades kill it in chop normally, like right through here. You know, if we were to put the context back on there, you see in here where the ribbon's all crunched up, that's where the divergence trades shine. Like if we were to do this spot from here, from 10:30 to 11:30 right here, you know, where the ribbon only spread out here, and you wouldn't have done a trade there because of the zone. Here, again, you wouldn't have had any trades in there because of the zone. Here, there are no trades. So there were no trend trades in there, right? So if we get rid of that, and just look at the divergence trades that are in there. The first one was right here. You would have shorted the open of that bar right there, right? That didn't work out. Well, actually, it was right here. The first one was right here. You would have bought the open of that bar, which worked out. You would have shorted the open of this bar, which would not have worked out. That would have stopped you out. You would have bought the open of this bar, which would have worked out. And again, this is the NQ. I mean, when I say worked out, we're talking 20, 30 ticks, the goal for the day, every time. So you would add one stop out, 2 plus, 1 minus. Right here would have been a break even because it went about 20 ticks into profit. The next one was right here. So let me just mark these. Okay. With the regular trend trades, you had none. And with the divergence trades, you had and I'll just mark them all and we'll go back through them in a second. Okay. Sorry, my voice is getting a little hoarse here. I'll mark them and then we'll go back and see how they did. Okay. We're just going to 11:30, right? So we'll do, oops, that's over 1. And one last one right here. Is that it? Or one more right here, right at 11:30. One more right there. Okay. So these are the trades. The trend trades, you had none. The divergence trades, you had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. Could you get your goal for the day anywhere in there, you think? The first one, yes. The second one, you would have, the entry point would have been right here. It did not go enough into profit to move your stop to break even. It did go more than 9 points against you, so you would have stopped out on that one. All right. This one, goal for the day. This one right here, you would have shorted this bar right here. That's what you would have shorted. Good. This one, you would have shorted this bar right here, which went about 20 ticks. Goal for the day. This one right here, you would have shorted. Goal for the day. This one right here, you would have bought. You would have bought the open of this bar, which went at least enough to get your stop to break even. This one right here, you would have sold the open of that bar. Goal for the day. Sold the open of that bar. Goal for the day. Sold the open of this bar right here. Was enough to give you the goal. Sold the open of that bar. Goal. Sold the open of that bar. Goal. Sold the open of that bar. Goal. Bought the open of this bar, right? You would have bought the open of that bar right there, and that did not go enough to get you stopped to break even, so that would have stopped you out. You would have sold the open of this bar, that went enough to get the stop to break even. you would have bought the open of this bar, goal. So there were like 2 stop outs out of the 16 trades. There were like 2 of them that were stop outs, 3 of them that were break even, and the rest of them were all winners. That would have gotten your goal for the day, Bart. All you need to do is get into the overbought or oversold without the black line. Buy the open of the next bar or sell the open of the next bar. It's as simple as that. Okay. So yeah, we'll have to get together and I'll get everything running on your desktop again. Does anybody have any questions about this? Matthew, I know you had asked about if you get 2 stop outs in a row on the NQ right now, you stop out twice in a row using the divergence trades. And you can see when it does trend, like let's go to a trending point right in here. When it gets into a trending point like this, these don't work out as well in trending markets. The divergence trades, they don't work out as well in the trending markets. Okay, they work out better in the chop. So if you have long legs, then you're more likely to get stopped out with the long legs. If you get stopped out, check and see what the leg lengths are like. Okay. I don't know if you heard that, Matt, but hopefully you did. Oh, good. Okay. But check and see what the leg lengths are like. Because if the leg lengths start to get longer like this in here, then they're usually followed by longer leg lengths. And the longer leg lengths are when you get these longer spaces in the overbought and oversold. Okay. You want to be in the chop like this where it just bounces back and forth. It just taps the overbought and taps the oversold. That's where it performs best. Right? All the places we never used to trade are now the places you really want to trade. And when I was going through this stuff and I had the ribbon on there and you saw shorting back down to the ribbon, the counter trend trades going back down to the ribbon gives you a nice target using the ribbon. And also you saw me when I put the 55 on there to give you a bias, or the YBR on there to give you a bias. You can use whatever you want to give yourself a bias. You can use a larger time frame if you want to. I don't know. I don't think I put anything in. I'm trying to think. Our slowest line in the context. I don't think I put any settings in there for you to change in the context. Let me just go and see. If there's anything in here that you could change to make this a much longer time frame. I don't think I put anything in there that's going to allow you to change that to make it do what you want it to do. We're talking about the lines up here in the context to make them last longer. I'll have to check on that and see if there's something up here that you can give yourself an on the same chart, larger time frame thing, just within the context. And you could always say, anything above the ribbon, you're only going to take longs, anything below the ribbon, you're going to take shorts if you wanted to do that to minimize the number of trades that you have. Okay, that was a question that came up this morning too from Jay. And what I had said to Jay this morning, if you just want to keep the lines, if you want to keep everything off of price and just keep using the oscillator, what I had suggested to Jay this morning was take a horizontal line and drop it right in the middle. Now, on this scale over here, the middle is between 0 and 100, so it's going to be 50. And on this scale over here, the middle is going to be 0 because it's between 100 and minus 100. So just look at whichever one it is and go to coordinates. In this case, it's 50. Okay, just put in 50 like that, and then double left click on, no, I'm sorry, right click on it and click lock like that. All right, and then it'll be locked and you can't move it around by accident. It'll be stuck right there at the middle at 50. Okay, and you can say I'm only going to take trades where the black line, the divergence is at least between the top and the 50 or the bottom and the 50. If you want to minimize the number of trades to reduce over trading. Like this one right here, you'd only take a trade like that, a long trade that's like that. You wouldn't take a short trade like that because the black's over the middle. It's going to reduce the number of trades dramatically. You'd only take a short trade like this one right here where the black is down there below the 50, or a short trade like this one right here where the black is below the 50. Like this one right here where the black was below the 50 at the point it went up there. All right, how to reduce the number of trades. if that's if that's what your goal is, to reduce the number of trades. They're all going to work out about the same. Okay, I like to see a lot of divergence, but because there isn't a lot of divergence doesn't mean it's not going to work out. I mean, a lot of them go right up to the edge, and they go right up together, like this one right here. And the next one worked out just fine. This one right here, the next one worked out just fine. That one, that one. So that's all that stuff. So let me go back here and say this morning we had 64 on the NQ. We hardly traded at all. We had 5 on gold and 13 on the ES. All right, we ended up with 532 per contract. Took us 4 minutes and 2 trades to get to gold for the day with 10 contracts on. We're at $1,150, and I think I'm going to stick with 10 contracts all year. But as I go through the months, as I progress through the months, I'm going to update this. All right. Now I don't think I'm going to do it on a month by month basis. I'm going to do it when this gets to actually, how am I going to do that? Yeah, when this gets to $2,000 with 1 contract, then I'm going to go to the next one. That'll make it a little different than last year. It'll be when it gets to $2,000 instead of month by month. Okay, so it'll be a little bit different look at the 24/20 blueprint as in 24/20 blueprint as implemented in real dollar and cent values, following it to the letter, because the letter doesn't say add another contract every month. All last year I said it works out to about 1 a month, but it'll work out to more than 1 a month if you get more than $100 per contract per day. And so far this year, we have every day. So it's going to work out to more than 1 a month by the end of the year. Anyway, if you haven't taken a free trial, go here. If you haven't taken a free trial, go here to mytradingiq.com. Click on the purple button right here. There is no credit card required for the trial. Click on that purple button, and that's going to bring you to this registration page. Just fill it out. All right. You want to get TradingView charts, and right now they have the deal on for TradingView charts again, is what I'm told. They have the deal on where they're giving 70% off to sign up for the premium and the plus, I guess. If you're on a monthly plan, they'll give you a huge discount to sign up for the annual plan right now. All right. That's what I'm told. There was an email that went out today. I didn't see it. I haven't really looked at my email much today. But that's it. Sign up for the free trial like that. All right. And with that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes, I am.
Okay. I am so sorry. I totally could
no
not
worries.
to a bunch of other things.
No worries. All right, guys, we have done everything. We've covered all the alerts. We've covered the good word for the day, done our devotional, our prayer. We'll take one last look at the daily chart just to see. Yep, look at that wick. Okay, so we're now well below that 38% fib extension. So we spiked the BBC on today's candle, very bullish candle. Okay, but so far the pullback is holding. So we could see a rally into the afternoon back to the high of the day, or we could see a shrinking violet back down to the 24% fib extension. This line right here is the 24. This line right here is the 38. So that's where we're at. That was the high of the day. The high of the day was 60.68 1/4. And here, of course, is the all-time historic high at 61.78.75. So that will do it for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.